Welcome back to the CryptoWorld channel, everyone. My name is Josh, and right now, Bitcoin just confirmed a new signal that we need to pay attention to while the price is moving closer towards liquidations in the short term. And on top of that, Ethereum is now running into some important support, so I'll be talking about that later in the video. Definitely watch to the end. First of all, just giving you a quick update here on the weekly Bitcoin chart, and right now the price of Bitcoin is playing out a perfect rejection from this important area of resistance, starting at around 36,000, going up towards around 38,000. And obviously, just over the last couple of days, the price of Bitcoin got pretty much exactly up to 36,000, which is where we saw that rejection in the shorter term. But remember, even if we see a rejection from this resistance, even if we see a bearish trend over the next month, technically speaking, here on the weekly time frame, on the larger scale here, we are still looking more bullish than bearish in terms of the larger trend at play, as I've been saying since the beginning of this year. But obviously, during this larger bullish trend, we can experience short-term bearish trends, just like how during this previous larger bearish trend or bear market that we saw in 2022, we did see short-term bullish trends. And in fact, right now, if you're looking at the daily Bitcoin chart, we can see a new bearish divergence has now confirmed with one daily candle close in the red, but ideally we still need to confirm another daily candle close in order to become more confident in this bearish divergence actually confirming here on the daily time frame. And obviously this is something that I've been talking about almost every day over the last 1 to 1.5 weeks, ever since the daily Bitcoin RSI entered extremely overbought territories. I've been saying that it's very likely we're going to see lower highs form here in the daily Bitcoin RSI, even if we see higher highs in the price, which would obviously lead to a bearish divergence. And what we have right now is obviously some higher highs confirmed in the daily candle closes in the price, while also confirming lower highs in the RSI, which is technically a bearish divergence once again. And if you're looking at some of the last few bearish divergences we've seen here on the daily Bitcoin chart, we can look back here during around the beginning of July and back here around the beginning of April. Obviously, we did see higher highs in the price and lower highs in the RSI in both of these cases back in April and July. And now this by itself is not necessarily enough to fully confirm a bearish trend reversal from this short-term bullish trend into a short-term bearish trend, but at the very least, what this bearish divergence means for Bitcoin here on the daily time frame is that we're due to now see some reduced bullish momentum, which usually plays out in the form of either choppy sideways price action, if not a slight pullback over the next 1 to 2 weeks or so. And so basically, we should not really be expecting a lot more bullish price action within the next 1 week, because once again, that is a less likely scenario. Of course, that's not impossible, but it's not very likely now that we have a bearish divergence. And on top of that, if you're looking at the daily Bitcoin MACD, as I talked about in my last few videos here on the channel, even though this has not confirmed any bearish reversal signal with a bearish cross, of course, we have been seeing some declining bullish momentum almost every day over the last 1 week, which basically means in terms of this short-term bullish trend, we're basically slowing down from that bullish trend. We're not seeing as much bullish momentum, at least in the somewhat short term here. And so simply based on the daily Bitcoin price oscillators, these are telling us that we're due to see either some sideways price action, if not a pullback in the coming 1 to 2 weeks or so. But remember, this is talking about more of these short-term bearish and bullish trends here on the daily time frame. This is not talking about the much larger trend here on the weekly time frame. Like I said earlier, even if we see some sort of pullback within the next few weeks, that won't necessarily make any major impact here on the weekly time frame in terms of the larger bullish trend. And so obviously it is important to understand the difference between this larger trend and these shorter term trends. Obviously the short term trends can change more frequently, whereas the larger trends on the weekly time frame, for example, do not change very often. Sometimes these trends last over a year. And as for major support here on the daily time frame, we could expect major support in this price range sitting in between around 30.5k to 31.5k, which was previous significant resistance, and so that should now be acting as new support in case the price actually pulls back down there. But obviously, just because we have support there, it does not necessarily guarantee the price is definitely going to make use of that support. And just staying on the daily Bitcoin chart, looking at these previous pullbacks that we've seen over the last 1 1 year or so. And this is actually a chart that I've talked about around a week ago here on the channel. I talked about how pretty much every single quarter of the year since Q4 of 2022, we've actually seen around a 20% pullback each quarter of the year. But obviously right now we are in Q4 of 2023 and we have not yet seen any significant pullback at all this quarter. And so for example, if you're looking at Q4 of 2022, we can clearly see more than a 20% pullback during November of 2022. Of course, that also came in confluence with the FTX collapse, but nonetheless, that was still more than a 20% pullback in Q4 of 2022. And then Q1 of 2023, of course, we saw more than a 20% pullback in that quarter during late February entering into early March. And looking at Q2 of 2023, of course, we can also see around a 20% pullback that started around the end of April, entering into May and early June. And as you can see, we saw a similar sized pullback in Q3 of this year from around the middle of July all the way down to around the middle of September. The price pulled back a little bit more than 20%. But remember, each of these pullbacks were still occurring within the much larger bullish trend. The larger bullish trend stayed intact the entire time, but of course, we still saw those short-term bearish trends, these pullbacks that lasted around a 1 to 2 months or so. And so simply based on all of the price action we've seen over the last 1 year, it's likely we could expect some sort of pullback in Q4 of 2023, which is obviously this quarter of the year. And simply based on past price action, which does not guarantee future price action, but based on past price action, we should expect potentially a 20% pullback from the highest point right here, which in that case, a 20% pullback would put the price at around $28,000 to $29,000. But we also have to remember that we have that major area of support in between around 30.5K to 31.5K where the price could stop at. And there's also other market forces, like for example, if the spot Bitcoin ETF gets approved real soon, then it's possible we might not see a full 20% pullback and we might see a very slight pullback and then continue much higher. So for example, if we only saw around a 10% pullback from the high, that 10% pullback would put us at around $32,000 approximately. And so basically, if you missed out on this giant pump and you're looking for a buying opportunity, of course, I cannot give you personal financial advice, but let's just say if I missed out on that pump and I'm looking to buy back into Bitcoin, personally, I'll be looking at potentially the low $30,000 area, as in around 31, 32, 33K, but I would not go 100% all in at those prices, just in case we do actually see a 20% pullback back down towards around 28 to 29,000. But once again, those lower prices are not necessarily guaranteed, which is why I personally would be buying a little bit higher than those much lower prices, just in case those low prices do not come. But remember, that is not personal financial advice for you because I don't know your personal financial situation. That is just letting you know what I would do if I missed out on this pump and I'm looking to buy back in. And if you're wondering where I'm trading all of these moves, where I'm buying, selling, longing, and shorting Bitcoin and other cryptos as well, I do usually trade over on Bybit. And in fact, if you use the link down below this video in the description or in the pinned comment, using that link to make a Bybit account can get you a massive deposit bonus. But in some countries around the world, unfortunately, you cannot access Bybit due to regulations. And so if that's the case, there is also Bitflex as a backup option for another exchange, because with Bitflex, there is no KYC. And there's also a massive Apple Watch giveaway running right now for Bitflex. If you simply make a $100 deposit or more and make one trade on the derivatives market over at Bitflex, that enters you into the giveaway. And so I'll make sure to leave a link to both Bybit and Bitflex in the description down below and in the pinned comment if you want to check that out to trade crypto. But anyway, zooming into the somewhat shorter term, once again, looking at that 8-hour time frame, obviously the price of Bitcoin already hit that previous price target. Like I talked about in my last video, the price target was sitting at around 36,000 and the price of Bitcoin got pretty much exactly to 36,000 before reversing. And so this symmetrical triangle pattern here on the 8-hour time frame is already complete because we already hit the price target. But if you're looking at the 6-hour time frame, this ascending triangle pattern did not fully complete. And in fact, right now it is invalidated. Obviously, we already saw the initial breakout to the upside and we had a price target at around 36,500 and the price of Bitcoin got to around 36,000. So pretty close to the price target, but unfortunately we reversed before hitting the price target. And the moment we saw a candle close back below this previous line of resistance, below the point of the breakout, that was the point where we invalidated the breakout, invalidated the pattern, and invalidated the price target for this pattern. And as for the hidden bullish divergence, obviously just recently this did play out with some bullish price action back back to the upside. But now that the RSI has formed a new lower low and the price has broken back below some of these important levels, this hidden bullish divergence is also now invalid. But with that being said, if the price can bounce sometime soon, basically bounce anywhere above around 33.6k above this previous low just here, then obviously that would mean a higher low in the price above this previous low, while the RSI on the 6-hour time frame is still forming lower lows. And so essentially, for as long as the price does not break below this low at around 33.6k, for as long as we see a higher low in the price confirm with a bounce, then we could potentially form a new hidden bullish divergence here on the 6-hour time frame. But as of right now, that is not yet confirmed. And if you're zooming into the 4-hour Bitcoin chart, obviously with the recent breakback below this previous line of resistance, this has now invalidated the breakout for this potential bullish flag pattern or horizontal parallel channel. And so obviously this means this breakout and this pattern is invalid, but we can still look at this line of support as support for the price of Bitcoin in case we go a little bit lower. And once again, this line of support is sitting at around 33.6k to 33.7k approximately. And if you're looking at the Bitcoin liquidation heat map based on the Binance BTC to USDT perpetuals futures contract, we can see an area of liquidations, an area of liquidity sitting at around 33.8k to 33.9k approximately. And so basically there's major liquidations, major liquidity sitting at those prices. And so what this means is we usually see the price of Bitcoin trend towards those liquidation zones in the short term. And so basically right now in the short term, Bitcoin is looking neutral to bearish in the short term because we're essentially breaking back into this choppy sideways price range. And once again, on the daily time frame, we have a couple of bearish signals pointing towards reduced bullish momentum potentially over the next 1 to 2 weeks. But anyway, now getting into the Ethereum part of this video, this is on the 3-day ETH to US dollar chart, and right now the breakout for this falling wedge pattern is technically still active because the point of invalidation for this breakout to the upside would simply be a confirmed break back below around 1.7k. Basically, if we see that happen, then that would invalidate this breakout and this pattern and this price target. And so at least for now, while the breakout is still active, once again, the pattern is still active and the price target at around 2.1k is technically still active. But if you're looking at the daily time frame, obviously just recently we have seen another perfect rejection from this exact area of resistance I've been talking about, sitting in between around 1850 to 1890 based on the volume profile indicator. And so for the bulls out there, in order to see another leg to the upside, we really need to see a confirmed breakout back above around 1890, ideally back above 1.9k, in order to see a leg to the upside towards this next area of resistance sitting in between around $2,000 to 2030. And as for support, we have this support level based on previous resistance, based on these previous highs, sitting in between around 1730 to 1750 approximately, acting as support. And as for the daily Ethereum price oscillators, right now they are technically still looking more bullish than bearish because we have not confirmed any bearish reversal signals in these indicators. But with that being said, like I've been saying recently on the channel over the last 1 week or so, if you're looking at the MACD, this is telling us we're seeing declining bullish momentum, at least in the short term, meaning the price is slowing down during this bullish trend, but we have not confirmed a trend reversal. And so basically, we're just taking a bit of a pause, a bit of a cool off from all of this bullish price action to help reset some of these price oscillators, which can actually give us some more room to the upside later on. And just staying on the daily time frame, taking a look at this broadening wedge pattern, which is technically still active, because in order to invalidate this pattern, we need to see a confirmed break in the price back below around 1730. And so considering as of right now that has not yet happened, once again, this means the breakout and the pattern is still active, meaning the price target at around 1980 is still currently active. And if you're zooming into the shorter term, looking at the 4-hour ETH to US dollar chart, right now, as of recording this video, the price of ETH is actually running into this important ascending line of support sitting at approximately 1780 to 1790. And in case you're wondering, this ascending line of resistance is sitting at approximately 1860. And so, like I said in my last video on the channel, technically speaking, while the price is in between this support and this resistance, we're basically in an ascending parallel channel, which is technically still a bullish trend. And so, like I said in my last video here on the channel, as the saying goes, the trend is your friend until the end, which basically means until the end of the trend, until a break below this support, we should be looking for long positions or buying opportunities along this area area of support while the price is still forming higher lows and higher highs. And so with the price just recently bouncing from this level of support, of course, for example, taking a long position with a stop loss just below the level of support in case we see a break to the downside, that would take a minimal loss, a small loss. But compared to the potential profit, if we actually see a bounce all the way back up towards the high end of this range, obviously, as of right now, that is a decent risk to reward ratio. But remember, that is not personal financial advice. I cannot give financial advice. That's just pointing out a potential trade that I would be looking at, but once again, not personal financial advice. And now, if we do end up seeing a confirmed break back below around 1780, then in that case, once again, we should also find support at around 1750 approximately here on the daily time frame. But either way, whether the price is bullish, bearish, or simply chopping around sideways, you can still make money in crypto by watching these videos popping up right here on your screen. The video in the top left shows you how to make money if the price is bullish or bearish using AI, and the video in the bottom left shows you how you can easily profit from choppy sideways price action. But anyway, that is everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.